Hello, everyone, and welcome to the Trader's Mindchat show. Today, we're going to focus on how the major players in the market operate and why we should be doing the opposite of them. So, first thing that I want to do is share with you a few key things that of how they operate. And I put this together. There's really 8 key points, and let me know if you're able to see this well right here. These are how the major players operate. When I say major players, I'm talking about the major institutions. I'm talking about the major hedge funds, pension funds, mutual funds of the world. The way The reason why they're looking at stuff like this is because, well, they are moving around billions of dollars. They cannot operate in the same way that you watching this can. You could buy something today, sell it 5 minutes later, and you're not going to affect the market at all. When they are entering any kind of a position or exiting, they need to do it over several days, several weeks. And because they need to move slowly, they're going to be very careful of where they put their dollars. So here's a brief list of the types of things that they're looking at. They're doing fundamental analysis, quantitative analysis, looking at the same kind of charts that we are. They're looking at macroeconomic data, sector and industry analysis. They're doing a risk assessment. They're taking a look at the overall picture of the market, and they're even doing ESG. Now, if you are somebody that is sitting there and you're wondering, well, how should you be trading the market? It's not by doing it that way. I just met with a small group of people. We had our Trader Circle meeting. This is a free meeting. We put it out on Google Meet and we meet. We've been doing it about every 2 weeks or so. If you're interested in that, I'll get the link to our calendar and you can sign up for our free events. But the main thing with what we were discussing today is that in order for you to be able to trade well, trade efficiently, trade part time, we can't trade like the major players. And a big, well, one of the big questions that people ask, and let me know if you feel or have felt similarly, is that you want to make sure that you're not missing anything, right? That you're putting your hard-earned money at work. You want to make sure that you're not missing anything. So there's a big temptation to look at all of this kind of stuff here, right? I like to know what the big boys are doing and to get their kind of insights. Sign up for different newsletters and maybe you're going to different newspapers, trying to tune into what people on X are saying, what people on YouTube are saying. If that's where you're at, mm, I've been there too. And that's where most people end up living, but that's not where your trading has to stay in order to do well, in order to trade well part-time. And that's what we were talking about during today's Trader Circle meeting. And the way that you don't have to do all of this is to know that all of this is reflected in all of this. This is a chart. All of the decisions that get made in this eventually end up on the chart. All of the major players that are doing all of this work here, they've got scores of analysts, lots of people doing research, lots of people generating reports, analyzing accounting, deep diving into all sorts of data models to decide where are they going to put your money? Where are they going to put their money? And They need to outperform. So they're doing all this stuff. And are they trying to rig the market? Sure. You bet. Right? It's all a dirty game. But all of their rigging or misinformation or whatever they're trying to do, all of it shows up right here. That this is the final answer. That this is represents all of their buying and selling decisions. So what we need to be able to do, and this was a big discussion during the talk, is learn how to analyze their decision making. Learn how to analyze their decision making. So I ask you, how do you go about doing it? I'll share with you what I do. The first thing that I want to do is I want to know, as far as their decision making goes, how do I not just read their decision making, right? Because today we're looking at this stock right now, right? Shark Ninja. The ticker is SN. This was on my watch list. It triggered an alert earlier today at 104.10. Some of our members are already in this one. What I want to know is not just how to look at this and say, oh, you know what, this is moving in this way and now it's moving up. I want to also know, well, how do I pick out this one out of the lineup? How do I know that, oh, well, this one is setting up to do something? Because if you take a look at the general market, right, here's the major indexes, they're all down today. Most of them are down a lot. Right, like here's the Russell. The Russell's down almost 2.5%. The S&P 500's down almost 1.5%. Same thing with the Nasdaq. So how do you find a stock like this that's up 5%, almost 5% on the day, and be ready before it happens? There's a very simple way to do that. There's a way to do that that you could do without needing all of this other stuff. The way that you could find stocks that are ready to make a move without having to do all the work that the institutions are doing is to learn how to ride their coattails. This is exactly what I've done over the last 15 years of my trading. I've been trading for 25 years. The first 10 were an absolute nightmare, and it was because I was doing all the wrong things. When I started to do the right things, that's how I was able to finally start to learn and then compound and then grow my account to where now this is my full-time thing that I'm doing. So, sharing a little bit of that with you here today. So, well, what do? The first thing to do is to find the kinds of stocks that are most likely to make big moves. You want to find the stocks that are most likely to make big moves. How do you know which ones are likely to do that? It's very simple. Historically, you go back in time and you see which ones, what were the qualities of the ones that moved the most throughout history, that moved 100, 200, 500, 1,000% or more in a short period of time. You take a look historically and you find the common qualities. The common qualities happen to be very strong earnings and sales and having something new going on with the company. You take a look at the chart and you see other people being involved like this right now. You see how prices starting to move up, and you see how volume is heavy on the move up, and volume is also heavy on this move up. So that's showing us that, hey, there's a lot of people that are in there that are going and buying, and it's not just Susie down the street. It's the bigger players, because you see it right there in the volume. Great. You also take a look at things like the group that it's in. You get to see, is there other major players that are in it? And you take a look at the market conditions. And all that helps you figure out, well, which ones should I buy? When should I buy? How much of it should I buy? All that is a very simple acronym. William O'Neill called it CAN-SLIM. After studying O'Neill's work and Minervini's work and Darvis and Tharp and a number of others, I've come up with my own version of that. I call it Eagle. It's very, very similar, but a little bit different. Uh, the whole idea, you want to filter the entire market down to a narrow group. So that's why this works. That's why it not only works, but it works well for part-timers, because what you're doing is you're focusing less on the stories that are out there, the news and all that stuff. No, like their decisions, the major players' decisions, are all baked right into the chart. So what we've got to do is screen for the qualities of the stocks that are most likely to move. Now, a question came up earlier about, well, what happens if I miss a trade? I get worried if I start to miss trades. Well, when we're filtering the market, right? We're getting narrow, right? So follow me here. We're filtering the market down to just a handful of stocks. There's about 10,000 or so stocks in the market. My universe only has about 300 or so stocks in it. Then I go through that universe, and by the time I'm done with everything, by the time I'm getting down to this is the only stock that I had an alert on for today, right? So from 10,000 to 300 to 1. The way that you're able to do that, right? So by definition, you're missing other trades, right? This isn't the only thing that happens to be up today. I'm sure that there's plenty of other things that are up, but the way that you actually make money in the market isn't by focusing or trying to get every opportunity. It's by focusing on one or a small handful. That way, you're able to actually go out and get them. So, how do you focus? The way that you focus is by, well, what I'm going to share with you right now. So the first thing that you're going to want to do, like we mentioned, is your screening process. You're screening for the types of stocks that you're interested in. I'm interested in growth stocks. So I run a whole bunch of screens, and I run those screens every week. I build a list. I call it a universe list. I actually think I still have that universe list up. Yeah, I've got this is my playbook. I shared my playbook with with members of our research program. There's actually more to it than just this setups list. I also have my universe list in here, which is what I was going to pick up. So there's all these stocks here. All these stocks past my screens is about 300 stocks in here, right? A little bit more than 300. From these, I go and I find all the stocks that are setting up for the week, right? All the stocks that were setting up for the week. You can see that most of them that were setting up didn't do very well. In fact, there were a lot of stocks setting up this week. There were over 100. Of the 100, only 29 of them are positive on the week. But of these 100 plus, only one very strong setup, right? It's Friday. We've only got one active setup on the list, SN. SN is the only one. So, how do you get to the one? You do it by clearly defining what you're looking for. That's where this tab comes in. Having a setups list, having a model of that, clearly defining what it is that you're looking for. When you clearly know what you're looking for, you're able to clearly find it. When you're specific, it naturally knocks out a lot of stuff. So there's going to be stuff that you're not trading, right? So come back over to that other list that I've got going on here. So on this setups list, I'm not trading DXY Z. I'm not trading Stoxel. I'm not trading FIHL, but I'm also not in HBI, and I'm also not trading AGX, right? So there's winners in there too that I end up missing. But you don't make money trying to trade everything. You make money by trading a small handful. And sometimes that small handful is one, sometimes it's three, sometimes it's zero. But the way that you make money trading, especially when you're trying to trade part time, is by narrowing your focus. We don't have the time or the luxury to be all over the place, right? If you're all over the place, you're not going to make money doing this. And then trading becomes like a hobby. And there's nothing wrong with hobbies. No, if trading is just like a fun thing that you do, okay, fine. But if you're tuning into something like this, I'm working off of the assumption that you want more. And that's why I'm structuring everything that I do around those that want more out of their trading. Looks like we've got a comment that came in. Caleb. Good morning, Caleb. Of course, I decided not to take SN, and it's up. Story of my life as of late. Well, it's just like it's like this, right? There's one trade, right? So SN up today, one trade. Notice when, and we spoke about this earlier too during the Trader Circle meeting. So we went through this other tab here, this monthly tracker, and I'll make this a little bit bigger for you guys. This is how things were for me last year, and there's 3 months that I want to highlight. I want to highlight June. Yeah, let's make that the brighter yellow. June, October, and November. Those were my best 3 months of the year last year. The other months, kind of touch and go, a little bit choppy, some up a little bit, some down a little bit. But it's those 3 months made my whole year. So it's not where you need to have huge gains all the time. It's not where you need to even be making money every single month, right? Well, in order to have a great year, the way that I'm doing it, I'm looking for. I've got my specific setups that I'm looking for. I'm waiting patiently for them to come, and when they do show up, I trade them. And the market is a cyclical thing, just like how there's seasons, just like how there's winter and then spring, summer and fall. The market is the same way. The market is in this constant cycle and it moves in the same way all the time. We don't know how long winter's going to be or spring is going to be, but one follows the other. The market's in the same way. One of the signs of the market when you're in the season when trades are going up, like if it's for those of you that are familiar with Stan Weinstein, when everything's in nice stage 2 and you're just beginning and it's moving up, when you're there, then lots of trades start to work. That's what happened in June. That's what happened in October. That's what happened in November. Right? And those were fantastic months. And even during those fantastic months, you see that my win rate was only about 50% in June. It was about a little over 40% in October and a little over 50% in November. But when trades start to work and you start to have bigger gains, notice the size of the average gain versus the size of the average loss. That's what helps to rise the equity curve. But also, when you're tracking all of your stats like this, look at the size of the losses, look at the size of the wins too. But the idea is that you're keeping your average loss very, very small. And when you're in an environment like we are now, the market's been very choppy. Sure, you may have missed SN, right? You might have missed SN, And it doesn't matter, right? The reason why it doesn't matter is because, well, that's one trade out of how many trades? And we also know that trades, well, when the market starts to heat up, that lots of trades start to show up and working all at the same time. So my point is, are we in an environment that is a strong one? No, we're not in a strong environment right now. So even though SN might be working and it might be good to say, yeah, I've got a winner, it's not the time to be leveraging up anyway. One of the reasons why I even bother putting on trades in a market where it's choppy, when we do get high quality trades, is because it's part of the way that I get a good feel of where we're at. If I put on a trade and it doesn't work, then that's something that's telling me, okay, it's time to start to scale back. When I put on trades and they do start to work, then it's also giving me another tangible feel of how are we doing? How's the market right now? Probably no more trades until the market is back above the 50. Let me see where the NASDAQ is at. Yeah, the NASDAQ just dropped below the 50-day moving average. Well, we'll see what it does, right? Right now, the Russell is testing the 200-day moving average. We'll see what it does. I think that we're in a very, it's a slower moving market. It's choppy. It's like that. This is the kind of market that if I had to call this market a name, I would call it the meat grinder, right? Because it's where it starts to test support and then it closes. Well, it gives you a little bit of hope that things are going to turn around, and then it falls lower, right? So they say when prices open low and then close higher, that it's a sign of weakness being bought, right? So we saw weakness being bought over here and then over here, and then even on what was that? That was Wednesday. Prices sold off and then closed in the top of their range. Okay, so weakness was being bought on the Russell, and then we get more of a sell off over here. So that's where it starts to drive people nuts, and it's why having uh, an approach where we're not only looking at just what the indexes are doing and we're not only looking at what stocks are doing, we're blending it together and we're able to have something that's robust. Now, to answer your question about performance from last year I was up about 25% overall for the year, and for and the bulk of it came in that last quarter. The bulk of it um, came in here, and that was in that my main account. In the more aggressive account, I was up 200% on the year, and the bulk of that came during this period too. Now, the reason, like, there's a bunch, so many different ways to trade it, and it's, you know, it's we all want to have great returns. We all want to have stellar returns. That's why we're here. That's why we're busy doing this. Because if we just wanted market returns, well, it's very easy to just buy the S&P 500 and put money into it every pay period, and you probably do very well, right? Like that's what most people probably should be doing. And by most people, right, like the people that don't want to be doing all this kind of work. Which one is your bread and butter? I would say, honestly, both of them are right, because the reason why is one of them the the 25% on the year, that's a much larger account, right? So that one I can't be, if I'm aggressive with that one and it goes the wrong way, then that's putting me behind the eight ball. The more aggressive account, that one is smaller to the point where if I were to have a significant drawdown in there, yeah, that it wouldn't be good, but it I wouldn't be crushed by it, and I'd be able to refuel it. There's also a level of comfort in there. It's also how tied am I to the money and a willingness to be aggressive with that. So here's some of what might fall into that, and some of it uh, from my own life, right? So at different stages, households can be more stable or not. You might have uh, both uh, both partners working. Sometimes you might not. If if you have two sources of income or multiple sources of income, it's different than when you lose a source of income, right? If a spouse loses a job and now you're relying more on trading, then it it affects how aggressive you would be able to be, because you could theoretically make up money. Like if you lost the money in one account, you could have other streams to replenish it. But when that additional source is gone, then it's almost not like you're removing the safety net. It's why when if trading is your only source of income, it becomes very difficult. It becomes very difficult. There's very few people that I know that I've met, that I've spoken with, including the trading influencers out there, that trading is their only source of money. Right? It's fantastic supplemental. It's fantastic that it could grow and be bigger than your job, and it could be the where it does become your only source. But if it's your only thing and it's not big enough, then that's where it ends up putting too much pressure on the system, and you end up making mistakes because of that pressure. The way that that's been the way that's been the most sustainable way for me to trade is by having additional streams. And the reason why is because there's less pressure. Even even with the that account that aggressive account that ran 200% last year, there's I had additional pressure on myself, Caleb, because for a very long time I was worried about trading in a way that was different than what I was actively posting about. So we have a trading accelerator. So for everybody that's watching, we've got a couple of different programs. We've got an accelerator program. We've got a research program. And in those programs, I post all this stuff. I post my different lists. I post my trades, all that stuff, and all my trading plans. And for a long time, I thought like I've got to be uh, as rigid enough where I could share exactly what I'm doing, give the plans out ahead of time, because so that way people could follow along if they want to follow along. Then when I uh, thought to myself, actually, I could do what I act as I need to act in order to trade aggressively. And sometimes that's a more nuanced approach. And if I'm able to make the trades that I want to trade, explain what I'm doing after, and teach people, well, that's going to help them quite a bit too. And so, for example, let's bring up Tesla. And so this was one of my favorite trades last year that helped me to run that account. So the way that I was able to run that account, a lot of it had to do with Tesla, but not just Tesla, TSLL. And the way that I was able to do it was to trade options, buy calls on TSLL and swing trade them. Now, that sounds fairly simple, right? Like you're just buying options on something that's already leveraged. And yeah, that's fairly aggressive, and you're doing it with sizing. The reason why I had the level of conviction to go into it that I did was because I'm looking at multiple time frames. So I'm seeing Tesla set up, breakout, not just on daily charts, but on weekly charts, and narrowing my entries and my stops down on intraday charts. Then I would look at the options market and I would start to see, well, which option should I buy? And how much time do I want to have on that option? Once I've got that part figured out, right? So I know the thing that I want to buy, I know how much of it I want to buy, and I also know that the thing that I'm buying has the ability to move extremely fast. And if it doesn't work out, I know to where like a hard line on the sand of where I'm going to get out, and that hard line on the sand is even smaller than my typical swing trades. In marrying all that stuff together and being able to act very, very quickly, that's how I was able to run that more aggressive account. And that more aggressive account actually did provide a lot of supplemental income last year for practical things, for flights, for Christmas, for a new dog, right? Like stuff like that. So there is a certain practicality to it, but it, at least for me, and that this is where trading is some like we'll all have our own systems and styles, and we have our own relationship to money and finance. This is where you start to have a certain feel of, well, how aggressive do I want to be with certain money? It's more than just, well, which way is the lines on the chart going to go today? And it's those kinds of things that I hope to convey in all the work that I do, because that I feel as though that's what's going to give you the reality of what trading is, or how I'm doing it, how I've been able to do it, and hopefully to be able to help you do it better. All right, we're at time really flies when you're having fun, right? We're already at 1:34 Eastern. So tell me what other comments or questions or thoughts do you guys have for me today? While you are doing that, um, if you have not already signed up to our newsletter, sign up for the newsletter. It's free. Marrowwealth.com/newsletter. And also, you could check out our brand new page that I just made. Get this on the screen here. I just made this page yesterday for our research program. So go check this out here. It's at marrowwealth.com/research. I'll put that in the chat. Some of you are already in our research program. But if you're interested in the research program, go check this out. And you could take a free 2-week trial. So stick around for another moment or two while you guys get your questions in. All right, it looks like that is about it. I know that there's a little bit of a delay between me speaking and uh how you guys hear it, and then it takes time to type in a comment. So I'm trying to stall as best as I can, but it looks like that's about it for today. So thank you all for coming. I hope that you got something out of this. If you did, I'd love to hear about it. Drop comments if you're watching the recording later on. And until next time, take care, much love, and as always, God bless.
Hey, thanks so much for sticking around to the end. If you're new here, hit the subscribe button down below and become a part of the Marrow Wealth community. And make sure that you check out some of the other videos on the channel. They're exactly what you need to see. And leave a comment down below. I read all of them. Leave a comment.